right, good afternoon, everybody. And again, welcome to our Outlook program today. It was nice to be able to see that we started off on the right foot here as April managed to be able to paint a much more hopeful picture than what she's been painting in the last 2 or 3 years. And I think we've seen the impact of some of her concern in recent years because markets have really been going sideways. So let's have a review of what the markets have to offer in terms of the technical prospects, and then we'll talk a little bit about how to be able to handle such effects in terms of being a trader or whether you'd like to be a position holder. All right. Can I just double check, guys, if my presentation is showing?
Yep, we can see it.
Okay, thank you. All right, so I'm done my report preparing to fish for rebound opportunities as I obviously tried to be able to align with what April had talked about. But again, remember our market's not coming off a very strong footing area as of yet. And it's really because of that that I'd like to be able to take all this with a grain of salt and take it one step at a time. And hopefully that we can see such comeback as we see more evidence that a lot more maybe spending is taking place, and then of course that markets seem to be responding to a lot of those positives that April talked about earlier. So to be able to just move in the aspect of the Philippine environment, I just wanted to start off with a longer term picture of the Philippine index here, and wanted to really just show you first where we are. Because if you've noticed the circumstance that is shown in the picture below, second, just you will notice that since 2021, after the market rallied after the COVID incident, here we are moving up and down in a very, very wide sideways range. And this particular rectangular range is currently still very much into effect. And this explains a lot of the ripple movements we've been seeing and that April talked about, that after the third quarter last year, we did see the market manage to be able to come back. Now, since we are inside this rectangular range, we have to really temper what our objective or expectations are going to be, because until we break out of this range, we're going to be looking to be able to try to buy this range into the low sides, maybe between support 1 and support 2, and hopefully sell it back when it eventually recovers back to major resistance, which could be closer to about 7,500 or 7,600. Again, the low end being between 6,200 and maybe about 60.70 to about 59.70. Now, looking into a shorter term view into the Philippine index, I mean, we really had a lot of damage in terms of some downward action into the index, falling from that 7,500 range all the way back down to where we were yesterday, which was quite closer to just below 6,300. Now, the reason though I'm thinking that we are going to be coming around to a potential accumulative phase, if not already now, is really because we've seen that a lot of the decline has already been factored in. And April did discuss the fact that a lot of the pricing in of all the negatives have been being shown into the market already. And that could quite explain why we're heading down. If you were to look at the big sideways range, as I have painted out over here, we're not coming from the middle. We're only actually coming closer to the lower end of the range. And given the context that we have reached that area, I mean, this is the area where, particularly if you're a position holder and you're ready to be able to take a position with good value over a potential rally, this might really be the range that you want to be able to start gradually buying. Right, and eventually, as an oversold recovery comes into place, then we can take advantage of that by identifying some resistance points to be able to sell to. Maybe the first ones between 6.6, 6.8 first, and hopefully down the middle of the year, maybe we can come closer to the higher band of this range, and that offered the next opportunity for us to be able to sit in the position. Now, again, I've shown this chart before because I wanted to be able to make sure that people are in tune with the prospects of this bottoming out process that we've been taking. Now, a lot of people have asked me actually recently, they said, well, one is in the last 1 or 2 years, you've been saying that the market is bottoming out. I said, yes, but the problem is the bottoming out process sometimes can take time, especially if there's still not so many catalysts on the positive side that can carry the market higher. But so far, what we've seen is the market has not gone back down to that extreme low that we saw closer to about that 4778 that you see here. And every time we've got a major base, sometimes we can see the process over here and the process over here. It took quite a bit of time after hitting the first low, retesting it back, and eventually turning again after the first rallying and then going all the way back down before turning. So you can see that the process of a reversal of a trend usually takes time, especially if there's lingering bearish mood or sentiment in the market that it's trying to deal with. But one thing that looks quite certain, it really is, I mean, it looks like we are dealing with a market bottom. It's just how much longer do we stay into this consolidation base before starting to be able to resume its advance later on. Now, this is a typical type of a market cycle that we come to be able to expect. And I think a just very rough drawing of what the cycle would look like. Normally, you would start from a period of disbelief. In other words, people don't believe that the market eventually has to hit bottom. And eventually, it'll turn around gradually at first and then normally accelerate when clearly where growth and earnings are very substantial. And that's when, of course, euphoria eventually comes in as emotions run high. And then, of course, as the bearish market comes in, then you get a whole bunch of negative types of emotional experiences coming along. Then you have a selling capitulation, which I think is what happened during that 2019-2020 period. And now we're seeing something like this. So if you notice that consolidation I was showing you earlier, that the long one, we're now getting that particular condition where a lot more people are now starting to feel quite depressed about the market because it's been 3 or 4 years going sideways. And now many people are already quite in disbelief that there could be upside into the Philippines. And so if you look back here in disbelief, where is that into the bull bear chart? You can see it starts again here on the left side. And eventually, as the fundamentals catch up, and eventually they will prop prices back up. So I really feel that we're at this stage of where the market is. We're just waiting for time to be able to condition the right fundamental factors to serve as catalysts for the market to recover. So when do you want to be buying? You want to be buying clearly and accumulating stocks when they're down here in prospects of the potential up move you would see later, right? Because when you're taking up a position for a lengthier period of time, I mean, you want to take advantage of the depressed prices because of poor sentiment. There are a lot of issues out there that are look good. It's just they're being devalued because of that sentiment that's taking place. And this is what really needs to be able to be taken advantage of. But you can do this gradually because it doesn't look like our market's running away just yet. And I think this would be a very much more clear picture so that you can understand where we are. So here's an example of a very lengthy consolidation base. After coming from a decline like this, it rallies and then all of a sudden a choppiness. If you look to the index I showed you earlier of the PSEi, it looks quite similar to this kind of movement. And as you see, the identified type of phase is what we call the accumulation phase. So this is where people are gradually taking up more positions after that. And you would notice that you're here because you would notice that prices will eventually start to flatten off its 200-day moving average, and it'll just cascade up and up above it. Eventually, you will move back into an advancing phase. We're not there just yet, but there are some other markets that are here. And if after an advancing phase, you go to a distribution. So this is the opposite of this one. Instead of buying stocks gradually, this is selling stocks gradually, especially if the markets are frothy or they have too lofty valuations and the prospects of growth are slowing down. And eventually, you will see markets come back down to try to rationalize the conditions of the weakness they've been seeing, or because of macroeconomics are showing quite telltale signs that you could have some negative action. Part of that could be included like higher interest rates, inflation, things that could generate a weakness into the prospects of earnings for a company or the company's growth. At the end of this, we start this all over again. So understand what this cycle looks like so that you can identify where you are, whether you're looking at a stock, an index, or any other tradable instrument. Just compare it to this particular chart here so you can tell roughly where you are, and that'll help you try to gauge what type of tactic you would use at that particular time, whether it be buying and holding in periods like this, or maybe take some profits, range trading, or maybe staying out when the market is starting to show a clear sense of the decline that it's going through. So looking back now into the S&P 500, you can clearly see that we have very much still an upward trending environment into the US. Now, there has been some slowdown in recent weeks, but that slowdown has not turned the basic uptrend as of yet. We would need a break below 5740 or 5585. That's these two levels right here before actually signing in a much heavier correction into the S&P. And I would agree with April. She said that just in case this S&P were to crack those major support and head into a wider correction, the reverberations of that clearly will not hit well into markets. Unless, of course, we are in a very different trend situation, which we possibly could be today. Remember, the US is going up, we're heading downwards. So in many times where we normally follow US higher, then if this corrects, then we'll normally correct as well. Now, if we're on two different avenues, it's quite possible that you could have a sell the US and look for another market to stay in first while waiting for the US market to become a bit more less pricey. And maybe that could add some potential value to some of the markets that have been sold off in recent days as well. Okay. Now, in terms of commodities, although April did suggest that prices like rice really have gone down quite tremendously, and that plays quite a big impact into inflationary concern, there are some commodity groups that seem to be moving higher, right? And although gold has tapered into a sideways move, we've seen copper inch up, we've seen oil prices dart up even a bit more stronger than usual, natural gas also heading upwards, corn prices have also been going upwards, and soybeans have also been going upwards. And this is what's contributing to that aspect that a lot of people are worried a little bit about whether inflation can stay a little bit lofty longer. And I think that is part of the reason why we've been seeing a general uptick in what we've seen in bond yields, whether it's into the US or whether it's in the Philippines. So April did show the bond yield chart earlier on, and just to be able to reflect it again, we did see it break out of this reactive channel, and that means that it's managed to climb up higher than what we initially expected, and that caused some turmoil into the market. Why? Well, because if you notice the last 3 months, inflation values into the US have picked up from 2.4% all the way to 2.9%, and that is how you battle inflation, right? By trying to be able to combat it with higher rates. And this is the reason why we saw the bond yield attempt to move up. April did also explain the conditions of why a Trump 2.0 policy could generate some inflationary conditions. And so I guess into this next few weeks, as Trump comes into office next week, everybody will be glued to be watching how he implements many of those policies that he was talking about and using as a potential incentive for people to vote for him. Now, I do hope that we're seeing in the short term some high zones first for yields, and I hope that we correct first. But so far, the immediate short-term trend is still very much into the upside. But I'm really hoping that we get a consolidation from this end instead of extending this more, because if it does go up back more, I think markets will be worried. So we hope that we can try to be able to taper down. That will contribute to a lot of potential rallies from markets as well. In terms of the Philippine condition, again, we followed suit. Inflation also ticked up 3 months in a row, and our bond yields also managed to recover after we've seen something closer to about 5.7%. We're back to something closer to about 6.38. And again, this got people a bit spooked and also generated some reason why the local market has managed to be able to get some selling. Now, going back into the dollar, and April did touch on this as well, you can clearly see that the trend into the dollar is still moving into an upward path. I do see some slowdown in momentum, so I hope that maybe upsides for the meantime can be curtailed and perhaps more sideways movement or a pause in the movement can take place. But if you look at the longer term view of the dollar, and this is the reason why this clearly puts us as a potential non-target for foreign investors for the meantime, is because as the dollar broke out of this big base that you see here, that shows that money flow is going back into dollar-backed assets. And right now, they're not in a hurry to be able to put their money into other countries because the differential between the dollar and the other currency you're talking about may wipe out the gains or potential keep things neutral from the investment you make in other countries as well. If you look at the Philippine peso against the dollar, you would see right now in the short term, we've had also weakness into the peso as we've gone to a high band of about 59.10. It's currently consolidating with the low of about 57.70. And there is still a potential that this may break and even stretch out to about 60.10. If you look at the chart on the right side, this shows a longer term view of the dollar peso. And you can clearly see there is a channel moving on the upside, the high band of which is at that 60.10 level. And right now it's sparking here first after a very dynamic recovery. But we're at major resistance right now at 59.10. I mean, I'm keeping my fingers crossed that we don't pass this area. And if we can do that and break back below 57.70, I think that can create a wave of bullishness back into the Philippines and again attempt to be able to add on to the prospective rally that we might be able to see. So I think we keep ourselves glued on what this particular range we're seeing into the dollar peso. So break upwards might extend the period of weakness, but if it can break support in this area, I'm sure that should be able to translate to something more positive into the local front. So just a quick recap of the events into the Philippine technicals. They've been quite weak, but as I pointed out earlier, we're coming into a period of major support where a potential swing low may manifest. And if this can happen, then that could entice a fresh rebound to be able to come inside. And since support would be between a range of about 6,200 on a bearish case scenario, maybe 60.70 to 59.70, these areas could provide good levels to accumulate a lot of the issues that April was talking about earlier on for a potential rally back to major resistance. And that should be able to give us good mileage for returns, even if we're in a sideways market. In terms of US technicals, clearly there has been some slowdown in recent weeks, but the uptrend clearly stays prospectively because we have not seen any change in trend as of yet. And perhaps it needs just this short-term consolidation to make that adjustment for the meantime. Commodity indices have been climbing up, and that's really been particularly because of oil prices or energy prices. But we're in the view that this might be temporary in terms of its recovery. And so we hope that this could eventually back off, and that should be able to temper off some of the inflationary threats. But again, we're still watching what Trump 2.0 policies are going to install here because that could change things, and we may have to make some adjustments as we come along, given this transitory presidential administration that comes in to be able to embark the new policy movements we're doing. In terms of inflation and bond yields, well, this is where the worry is taking place because we've seen a major rally into both. And conditions that keep bond yields higher tell you that interest rates may stay higher for a longer period. And this is what's causing markets to worry and to wobble. And but we are very much also seeing this as a potential temporary snag because we have already started a cutting cycle into rates. It's just that it may not come down as fast as what we want. And as interest rates may take its time to be able to come down, the impact of that higher rate environment may still have its tug on a lot of the earnings that we're seeing with many of the companies that we're dealing with into the investments. And finally, of course, on the dollar and the peso, a strong dollar clearly is a thorn on our side. And because it proceeds with its uptrend, it might really curtail funds flow into markets such as us, and that contribute to the peso weakness. And again, that all contributes to a potential the wide consolidation we're seeing in the equity markets may continue. Now, by no means is the Philippines the only ones being affected. If you can see the year-to-date chart so far of the number of markets I've shown here, you can see from the MSCI Indonesia, S&P 500, the Sensex, Thailand, Philippines, Malaysia, Japan, and Shanghai. You can clearly see all of them have not been doing well in the at least the initial part of the year, because of a lot of those little worries that we were talking about earlier on. And so far, it's really only South Korea and Germany that have been doing well. Yesterday, France broke out as well. So there are some markets that seem to be doing well, whose currencies are not so avidly affected by the strong dollar as of yet. So what should traders be doing or expecting? Well, the index shows a large sideways band as it proceeds with its rectangle and its attempt to be able to bottom out. And that consolidation keeps things in a very snug range. So the range, as I pointed out, is between 75, 7600 as a high, the low being about 6200 to 5970. So within that range is where we're going to be trying to be able to make generate our returns. Now, this consolidation that we see is going to continue until something changes, particularly in fund flows. Because right now, fund flows are not really very contributory because, like we pointed out, people are seeing the dollar still strong, Philippine currency is not, so they don't want to put too much money in this area where you're going to get that type of negative return. So we got to be able to limit some of the expectations we're looking at and just make sure that for now we're trading a range. And just like what we're doing, if you're a miner looking for prospective trades, again, you'll be looking for the low sides of the range to be able to buy a healthy amount of your accumulated position. And when we come towards a high band, then you would want to be able to take some profits or unload on a portion of the positions that you have. And we'll keep doing this until the range eventually breaks out. So the idea over here is you can choose two trading styles. The first is you can actually trade stronger trend issues. I'll show you an example of that in a while. That means you're going to be taking issues that are showing outliers, right? These are strong issues that have been showing themselves, and you can try to make your money in there. Unfortunately, you don't have a lot of them into the market right now, so your choices are very, very few, but there are. And the other one that you can do is you can wait for some issues that are going to oversold conditions, buy them on those oversold conditions when they start to show some pattern making, and then bet that they're going to make a counter rally and try to make a differential into the rally for where prices rally to the first or second zone of resistance. Now, if you were to count on the 30 index members, 20 of them right now are actually on this part. They're into downtrends right now. Some of them are starting to show some oversold tinges already. And so we should be keeping our eye on many of these issues that are going through that particular phase. Now, let me just talk a little bit why, of course, we still expect the wide consolidation range to continue. April did touch on this, but I'd just like to show you visually. This particular chart you see over here shows you net foreign flows, and it's plotted versus the PSEi returns on a yearly basis. So if you would see all the red bars like you see here, they show or depict these are net selling flows for the year in the Philippines. Okay, so you have net foreign selling here, 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 etc. Now, the values you see on the respective columns show you what the PSEi put out as a return. So in this case, it was down 3.85% for the year. Here, down 1.60. Here, down 12.76. Here, down 0.864, etc. There were some net foreign selling years that did generate gains, but that's very few. So far, only two. In fact, in the last 10 years, 7 of them showed net foreign selling. Of those 7, 5 of them showed negative returns. So that kind of tells you the picture that as long as net foreign selling is there are higher chances of seeing negative return be kicked out by the index. In fact, that's roughly about 70%. So the only nice thing I see so far is if you were to look at the trend of events over here, it looks like net foreign selling seems to be tapering. Except for this year we've seen here, you can see that it was very big in 2020. a little bit less in 2022, 2023, and even 2024. So I hope, just like April said, sana patapos na yung ginagawa nila because a lot of them have already been unloaded, and that should be able to give us a chance again to be able to generate a rally prospect into our market. Now, just very quickly, I wanted to be able to identify of the index stocks, which index stocks look a little bit more on the stronger side or which ones are on the weaker side. So what I did is I categorized them all. Those index stocks that are trading above all the exponential moving averages that we follow, that would be from a 20 to a 200. These are all the 7 issues or index stocks that are trading above their moving averages. The ones in red here are all those that are trading below their moving average. The ones in the middle are telling you that these are the ones that are moving generally sideways. So uptrending on the ones on the left, downtrending here on the right. And I think you can clearly tell where the lopsided nature of the trends are. It's clearly 20 of them are here into a downtrend. Now, those that have an underline into these downtrending stocks are issues that are now showing signs of being oversold. So of this 21, 2, 3, 4, 5, roughly about 6 of them are starting to show oversold signals already. So that means that you have to start watching these things for a potential recovery in terms of generating that recovery aspect. Now, going back on the left side here, in the uptrending issues, those that have an underline are showing you uptrends that are coming or showing some tinges of being overbought. Right now, there's only 2 out of the 7 that you see. That's Globe and LTG. And LTG, because it just recently broke out and went up very strongly. Globe also recently shot up, but now is consolidating because of the overbought condition. The one thing I'd like to be able to point out, if I were to be able to just generate some aspect of sectoral or trend thoughts about issues that are on this side, you'd notice that broadband stocks, so for example, you have Globe, you have Converge, you even have PLDT, they're kind of on the left side of this. Right, and dividend payers, again, all pretty much on this side, and also some issues in utility and services, again, also on this side. Now, what are the issues that you're seeing on the weaker side? Well, I think April pointed this out. Property. I also see a lot of conglomerate names down here as well, maybe some of them because they have a lot of properties. And of course, some banking stocks are also into downtrending conditions as well. So right now, my focus is if I see better movement, maybe I'll start from looking at issues in these sectors or conditions, and then maybe look here when I see oversold potential recoveries from them. I'll only do that for potential short-term trades for them later on. So for the stronger issues, I'll give a few examples. Converge is here on the left side, winding up and now attempting to try to be able to make a challenge and resistance, and this showing very, very strong movement. So I would look like to hold or maybe even add to positions here, especially if this can punch over 1740, as that will generate more advancing. LTG broke out of major resistance just 3 days ago and then corrected for a couple of days and then went back up. So again, showing you a very healthy trend condition. Globe has managed to be able to bottom out from this move and is prospectively trying to consolidate for now. Either consolidating here or maybe a slight pullback to support might offer a better window to buy with the prospect of rallying back to the previous high. And then, of course, Meralco also consolidating into this, but still trading above all moving averages, also showing a prospective upward trending breakout once this consolidation ends. In terms of the weaker ones, let me put it here as to what a potential oversold rally would look like. So, for example, a massive sell down into issues like SM Prime. I projected even the range lows, and we're now hitting the major support areas of that low range. So we've been seeing an attempt to try to make a recovery. Now, yes, there could be a potential recovery here, but I'd like to let you know, trying to be able to foretell when exactly it will rally may be quite a difficult task. If you were to look at what happened here it tried, then fell back down, tried again, then fell back down, and it was only after the third bottom before we saw something more substantial come in. So those who are trying to bottom fish for things like this, be prepared that I think you better do this gradually. Don't just buy everything all in one go. Spread it out over time. And as you see more evidence that the rally seems to be solidifying, maybe you can add up to the position there, targeting next zones of resistance like this one, and later on, maybe all the way back here. GT Capital is another one that's also coming closer to the lower end of its particular range. Again, that's why we want to see for a potential oversold rally as well. And if you were to look a few more Wilcon, I mean, perhaps this might not be the first in my attempt to try to buy, but again, touching the first major support at 10, and the next one may closer to about 830, be a potential low side of its range. And of course, Jollibee. Jollibee is somewhere in the middle of the big consolidation range. First major support would be closer to 237. We're not too far from that, and the next one would be about 260. Okay, I also want to be able to point out that this part of the year, coming from January to February, I've noticed a lot of inflection points in terms of movements throughout the years. If you were to just look at this is in 2020, of course, this is COVID, but look at when the acceleration took place, just right after that Jan-Feb area. Major high came in coming towards 2021, again, closer to that Jan-Feb area. Another major high came in the year after. And then again, the year after, if you notice, the blue lines tell you where January, the end of January is. So it's really very much around that ballpark area. So we're coming towards that area again today. So we might be expecting a potential inflection point. Given that, we've been seeing trends coming down. So could this be a reversing inflection point, us seeing a major low before seeing a potential rally? So let's keep our fingers crossed that such a thing can happen. However, if you were to look at seasonality into the PSEi, Feb normally is a traditionally weak period. And if you notice, only 30% of the time did it even register an advance in that particular year in the last 10 years. So normally after a strong January push, market corrects into this period. Now, if we get a reverse inflection, then normally this would be turned upside down. January will be weak, and then you normally get an upward moving movement here. Next major turning points can be sometimes over July and probably between September and October already. So we hope that we can see something more structural come in during this particular period. Okay, so in summary, we still have some headwinds to be able to deal with, given the context of things, and our market remains challenged by some of them, lingering inflation caused by oil, possible Trump tariffs, changes in policies, of course, the conflicts we've been seeing around the world with the war in Ukraine, the war in Israel, and of course the Gaza area. We also have elevated rates, and that also being extended because of the rally we're seeing in bond yields, which could lead to a slower interest rate descent. And that another being a concern. And of course, the press on the currencies, as we talked about earlier, particularly due to the strong dollar. And because of which, I mean, these issues, including the PSEi, would probably face ongoing downtrends or maybe consolidations. As we're trying to be able to look for major supportive areas for that, because many of them are still trading below their averages as of now. But we do potentially expect that a bottoming out grind will continue. And since we're coming towards the lower end of our trading band, we should anticipate that these are the potential buy zones that be fleshing out right now, and maybe for investors to slowly or gradually take advantage of these extremity into the low side of the market. If you're a trader, try to be able to look for potential trades for very, very strong stocks, but please remember that we have to limit our expectations. So strong trending stocks can be your primary picks. And then if you see cases of oversold stocks recovering, especially from quality issues, I'd like to very much specify that, because you could have issues that are going down for very clear reasons, like you can see earnings going down, no growth catalyst coming into place. This is not what you want to try to buy an oversold stock. You want to buy a good stock that's being depressed, not a bad stock that's being depressed, because more likely that will continue to remain depressed. And of course, for those who are a little bit more longer term, for position holders, like I said, since we're on the low sides of the range, or at least what it appears to be the low sides, this looks like a good opening for accumulation to add up to some of the positions you have, or perhaps generate new positions that are now into those low zones. Because even if it were to just rally back to the top end of the consolidation, that could still be quite a bit of remuneration or a profitability for you who are even trading these wide ranges as well. So with that, I'd like to be able to say thank you as I come to the conclusion of my report, and I'll be more than happy to take any questions that you might have along the way. Serge, thank you very much.
All right. Thank you so much for that, Juanis. So yeah, it seems like the overall market is still in a general downtrend or maybe a disinterest phase. And I guess what we know from experience is that price, it does tend to lead fundamentals, or at the very least confirm it. I guess my one question to you is, given also the fundamental picture that April framed a while ago, which was a bit more positive. I just want to ask, is there a single most important or particular index level that you would draw as a line in the sand? Now, once you see, like it's a prices cross over that, you can say, all right, great, the comeback here is really here. Is there any particular index level there that we should be paying close attention to?
Well, since we're stuck in a big range, I mean, unless we can break out of 7,500, we'll still be stuck into that range. But if what your question is, how do we know that at least a short-term rally is coming in? We need to break over 6,600 to be able to support that particular argument that a oversold rally is showing at least a more substantial upside that people should partake of in terms of that short-term trading strategy.
Okay, yeah, thanks for that one. So I guess on the short term, that 6.6 is the hurdle you want to clear.
Yes.
But I guess I just also like to reiterate to our audience, as I did a quick calculation here. So even if we just reach the top end of the range that one is alluded to, from the 6.3 price of today, that's a 21% upside from where we are. So despite the market being in range, I'd also just like to stress the range is big, and yeah, there's potential gains there.
Make money in the range, yeah.
Yep. Okay, yeah, thanks a lot for that, Juanis. And similar to our fundamental views, you can hear more from Juanis by checking out his Tech Spotlight report on our COL website. So this one comes out daily, and the outlook that he gave here, it will also be actually uploaded in our research tab.